Today's video, I'm gonna share with you guys how I could have used Orderflow to get a better entry on this trade right here for the S&P 500. So before we go ahead and get started on why I decided to enter that market, let's rewind and talk about the trade plan and how I was able to identify that area first. We come over and look at the volume profile. You can see right here, we have what's called a minus development area. And just know it's basically an inefficiency in the market. And a lot of times you're gonna see when we get a big push in one direction and we don't have any back and fill in, that's exactly when this minus development area is normally gonna form. So one of the things that we did on the live stream is we basically identified this area on the chart. And I already knew ahead of time that when we come into this area, I want to look for a buying opportunity. I talked about a DCA type of trade on the live stream. Now, if you guys want to make sure you don't miss the next time I go live, then you want to check the link in the description box down below where it says main channel. You click on that link and subscribe. I stream live each day the market is open, starting at about 9 a.m. until sometime after lunch. That's also where all the giveaways for the prop firm accounts also take place. So now that we've already identified this zone, we can see once the market started getting that area, I wanted to go ahead and start to get long in the market. We can see we started getting that area somewhere around 12 o'clock. And at the close of the 1230 candle, that ended up being the low of the session. If we look at the candle on the trade where I entered the market, we can see that was at the close of the 1225 candle. Now, when we come over here and we bring bookmap into the equation, which is a tool I like to use to trade order flow. If you guys want to make sure you get the best deal on bookmap, there's a link in the description box down below. But here's some key concepts with bookmap. If you see the horizontal lines going across the screen, the darker the red color, that means the more resting orders, the more resting liquidity at that area. If you look at this zone right down here, somewhere around 5150, you can see right down here, we roughly have 161 contracts there. And here's where I ended up getting the market. We came down here, the bubbles were very small, meaning no more aggression to the sell side. I went ahead and jumped in. Also, something that I was spotting, if you look right here, this blue line is basically our iceberg orders triggering off. So when this is going up, the blue line's going up, that's letting me know that buy iceberg orders are stepping into the market. Then you can see the red line dipping down right down here. This is stop loss orders being triggered. And we can see it right here on bookmap. Look right here at these two dots right here. The red dot equals stop loss orders. So if it's below the bubble, which the bubble is where price is, that means that's how many contracts were stopped out as we're coming down. 603 stop loss orders. Then if the blue is below price, you can see that we had 1,048 iceberg orders were triggered off, which means iceberg orders are only going to be executed by bigger money players in the market. And a lot of times we want to write their coattails. And I knew we had that liquidity down there. So as we came down and we started coming back up here a little bit, I went ahead and jumped into that trade. However, if I would have been a little bit more patient, it could have got better, because when we scroll this over here to the right, notice as we came back down and we actually traded into this liquidity, I want you guys to see what took place. Right here, we have a big red bubble, which when the red bubble occurs after we've already been going down, could be a sign of absorption. Then the market goes a little bit lower, a smaller bubble is formed, which is now letting me know that the aggression to the sell side is getting weaker. You can also see we get another 423 iceberg orders to trigger off, with 167 contracts stopped out on this move down. So you get traders being stopped out at a time where you also get bigger players stepping into the market. Now, unfortunately for me, I was not patient enough, so I had to sit through that pullback. But that's basically the concept of why I got into the trade. Now, let's talk about the target on this trade. Now, the target was very simple. On the 30-minute chart, I grabbed my Fibonacci retracement tool. I measured from the swing high right down to the swing low, and I was ideally trying to hold out for a 50% retracement level, hoping we get some type of ABC pattern on the way down. But I was just going to try to target right around that 52.86. But if we come back over and we look at why I actually exited the market, notice I did not exit at 52.86. 52.86 actually occurred after I already exited the market. We actually ran all the way up to 5,300. So the reason I went ahead and bailed out that trade early, you can see right here at 101, we had the 30-year bond auction. So just out of caution, I went ahead and exited that trade ahead of time. That way, in case the market reacted negatively to that news, this winning trade would not end up turning into a losing trade. Now, if you'd also like to learn how to use bookmap to identify traps in the market, then make sure to watch this next video right here.